Okay. Good morning, guys. I hope everyone is having a lovely trading week, and also the markets have started off today morning with quite a strong move. So we're also going to look at that. Actually, that's what I was looking at before we started. So if you can hear me, as usual, just say hi on the chats. Charles is saying, what's popping with XRP? I've not really checked on cryptocurrencies, but we can have a look at it and see what's going on there. Okay, so if you can hear me, quickly just say hi on the chats, and then we can continue. With me is the gold chart. I'm trying to compare it from what we had last week, and I'm just changing. Hi, Kevin. Hi, Korea. Yeah, so I'm trying to compare. Last week we had something like this, which was the falling wedge you had last week, and now I've just adjusted it like this. So you're going to talk about what happened this week and the whole change in sentiment, and then we see what you're going to do from there. So quickly going to open this. I'll just go through it. Okay. You can see my screen. Hi guys, I'm seeing more guys. Yeah, I believe I'm can hear me. Okay. So let's go to this week's summary. Before you talk about this week's summary also, let's talk about last Friday's theme, which was a mismatch between the dollar and the other markets. And I have that PDF over here. Yeah, so the main theme was the dollar being led to the party, and there was some sentiment that it wasn't aligning with other markets. So other markets were already pricing in high interest rates, and it's only the dollar that wasn't strengthening or wasn't building an uptrend and things like that. So this is what we talked about last week, and the expectation I remember was that if we see payrolls here, so this was from last week's video. So if you go back to the video you did last week, you'll see this. So if you see payrolls coming in stronger, then it might correct the dollar. But again, payrolls came in very weak, and that also build up to the case that the dollar will continue being weak. And we even check the yields. So let me even go to do I have the yields here? Yeah, this one. So remember what we talked about with regards to the yields. The treasury yield is supposed to reflect the current interest rates. Yeah, so the treasury yield reflects, if you can just like the live and then, So the treasury yields reflect where the market expects interest rates to be. So it gives you a rough estimate of where things are supposed to be. And at the moment, interest rates for the US are around 5.2, 5.25. And the 1 year treasury is around that point. So it was even going higher because of the expectation that we might see more rates coming up. But look at what happened this week. So if I zoom into this chart, is the daily chart. See that you've generally gotten back from those highs of 5.5. Right now we are sitting at 5.3, which is very close to 5.25, which is the current interest rate of the US. So the market is kind of thinking that maybe 2 hikes are not going to happen, even that 1 hike starting to be a bit shaky, that belief. And why is the reason? Why is the reason that's happening? If you go back to now, let's look at this week's fundamentals. Yeah. So this week we've had a stream of data from the US. First off, last Friday we had non-farm that came out, and then we had CPI this week and PPI this week, and everything was pointing towards a weaker dollar. So here it's saying dollar long positions are evaporating rapidly, with PPI numbers all but confirming the deflationary narrative in the US. So the idea right now is inflation is coming back to normal in the US. And so the market is starting to be less worried about rate hikes. And that is why we are seeing the dollar weakening. So yeah, they're saying it's hard to find a counter argument against the bearish dollar. Meaning, if you look at all the fundamental reasons to build a bullish case for the dollar, at the moment it seems very weak. The best case we can do is maybe the expectation and that the Fed will still remain adamant with hiking rates, and even that is quickly evaporating, because remember they say that they look at the numbers to base on their judgment and the monetary action going forward. So you can see that things are getting a bit bearish for the dollar. We don't know how long this is going to last, because then again, we still have meetings coming in, FOMC meetings. But yeah, so if you go through this, it simply alludes to the same thing, that the moment we seem to be changing momentum with regards to whether you're bullish or bearish in the dollar. And even with this CPI reading, yeah, all those bullish reasons for the dollar, all those reasons why we should have bought the dollar are slowly being tapered away. So at the moment, there's not a very strong case for that. Okay, so let's just jump into the charts and see how this reflects in the markets. Let me go back to my charts. Okay, so we'll start with gold as usual. Go to the hourly chart. Okay, so I hope everyone can see my charts. Okay, so on Friday, so this is today. This is today. This was Thursday, Wednesday, Tuesday. Okay, so we're here. So, yeah, 7. So okay, let me just have a clearer chart first. Let's do USD JPY. I think I've marked one of these with the news. Yeah, it's Euro USD. Okay, it's Euro USD. Okay, so this one has a clearer annotation with what happened. So we'll start with this and then we go to all the other assets. I want us to pick up from where we left off on Friday, and then from there we transition to what we expect today. As you can see, Euro USD has been in a very strong bullish trend, and you're going to see what to expect afterwards. So this is Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, so this was what we had last week. So if I can just zoom this in here, this section over here. So this is where we were at last week's session. Yeah, and we basically had the Euro USD shooting higher. And if you look at what happened last week, it was non-farm. If I'm not last week, it was non-farm. Yeah, so last week non-farm came in very weak, and we basically had this push upwards with the dollar. So remember when we were talking about the possibility of the dollar gaining some strength, and we drew these arrows here over here. Yeah, so our play was that if non-farm comes in strong, then chances are we'll see this market heading lower. But what happened is at 3, the markets came non-farm came in very weak, and that made the dollar very bearish. That means Euro USD shot up, and it was sort of building onto the narrative that the dollar, or the worries or the concerns about the economy the Fed not having enough data to hike rates slowly being tapered away. So in this case, we saw that we had a spike up, and then on Monday we had this sort of cooling off over here. So if I can just zoom out so that these ones can properly be on their section. Yeah. So on Monday we had this cooling off over here, and then we had a CPI reading on Wednesday, which is this big section over here, and then we had PPI yesterday. So that basically explains why we had a very strong uptrend. Both came in against the dollar. So non-farm came in against the dollar, CPI came in against the dollar, PPI came in against the dollar. And what we're saying is inflation seems to be getting under control, being confirmed by both CPI and the PPI readings. So at the moment, if you look at Euro USD, and if you've been trading for some time, you'll know that 1.12 1.2 are critical levels. So we should expect the market to sort of ease off a bit for the day. That means we can actually, you've already seen this pullback here, or we might pull back slightly lower so that we can ease off a bit. But the case for the dollar fundamentally is still bearish. That means you expect a very bullish trend. So if you look at this on a higher time frame, you have something like this. Yeah, you have something like this. I know that. Let me just clear these charts for today, because we've already done this last week. So I'll just remove this. Okay. I can also remove this. Yeah. So if you look at this chart, we seem to be in a rising wedge. However, we know that the market doesn't move upwards in a straight line. We can afford to wait for some pullbacks if the situation is going to continue as is, to take Euro USD long again. That means we can afford to look for optimal entries around these levels, either down here at 61.8 with a fib, or at 50%. Alternatively, if you're trading different concepts, you can, for example, check on supply down here. This is where we started here. This is where we started buying off. But ideally, if we pull back to this point, then that should be a very good opportunity to look for buying, as long as conditions stay the same. Another area to look for buying opportunities will be around this point and around this point. This is a lower time frame. Yeah, this is sort of a lower time frame demand area that if we at all see some cool off today, this is Friday, then that's when we might look for buying opportunities. Alternatively, if the dollar continue, which is very unlikely that we will see this uptrend continuing as strong as it is, but if we continue going higher, then I should expect us to get to the next level. Yeah, so you can see that we're heading to all-time highs. I mean, for the better part of the year, we've never had a euro this strong for like a really long time right now. So the next key level, usually when you're breaking new highs, it's important to look for round numbers. So 1.13. It's important to look for round numbers if you can't see any level above that is of interest, like a support or resistance level. So in this case, then 1.13 is a good round number to look for reactions here, if at all we continue going high. But then again, how likely are we going to have this push even further without even a pullback first before going higher? So that's something you need to be careful about. And technically, because we're in a wedge, there's a higher chance of us going lower before we go higher, if you look at the technical analysis. Because I'm sure if you're using indicators at this point, you know everything is overbought because of that uptrend. So you might want to wait for the market to settle first before resuming your long position. So having said that, it gives you a very clear picture of what to expect. So if you're looking at DXY, hi Samson, if the DXY is weakening due to inflation, how do you explain gold isn't weakening as it is used as an inflation hedge? Okay, so let's get to gold, actually, the chart of gold. But for this one, just ask yourself, how likely are we going to maintain a strong trend upwards without first seeing a serious pullback, so that if guys are taking their profits, and if guys are readjusting their positions during this time, because this is a very serious uptrend, upwards momentum. And yes, the dollar is supposed to be weakening, but we still need to see how this goes first in terms of a pullback. Okay, so gold. Let me just remove this. This is from last time. Okay. So the question is, the question is, why isn't gold weakening as it is used as an inflation hedge? Okay, so there is inflation is, if the dollar is weakening, If inflation is going down, that means you expect that the dollar is going to weaken. Yeah, because you expect interest rates to go lower. So gold isn't supposed to be used as a. So when you're looking at gold, you don't look at gold in isolation. You look at gold in comparison to the yields. Yeah, inflation adjusted treasury. So gold, first off, what you're trying to know is, if I'm an investor and I have cash, should I put my money in should I buy gold, or should I buy what is it called, treasury yields, because they're going to give me some sort of protection because they have a risk-free interest. Yeah, those are the two things investors have on the table. Yeah, and if inflation is going down, the expectation is treasuries might start looking less attractive. Yeah, if treasuries start looking less attractive, then gold starts being a better alternative when it comes to its strengthening and things like that. Then number two, remember, gold is priced in dollars. Yeah, and if you expect inflation to go down, you expect interest rates to go down, then you expect the dollar to weaken, then you expect a stronger gold. So the only time people use, again, gold as an inflation hedge is when the alternatives are not viable. I hope that answers your question, Nderitu. If it doesn't, just type on the chat section. Anyways, so for gold, CPI was a really big, provided a really big upside. And generally, if you look at this trend, we have been trending higher. So if I put, for example, a moving average, just so that we can see the trend, we have been heading higher over time. So it's generally in an uptrend. However, we seem to be in sort of a consolidation at this point. Why? Because yesterday we had the PPI reading, and like the other markets, we didn't have quite a big move in gold. The only time we had a huge move in gold was when CPI was coming out, and when we had non-farm that set the trend for the week. So this can be explained, either people are profit taking, market participants are taking their profits and you're seeing this consolidation, or alternatively, what you can explain with this is the fact that there's a divergence between euro, pound, and gold, and then it tells you that there's something else going on in terms of the eurozone and in terms of the UK economy. And this is probably due to the fact that maybe they might keep their rates higher for longer than in the US. So it can explain why euro is looking very bullish and gold isn't looking as bullish in as much as it's in an uptrend. However, I wouldn't expect a sustainable or a sustained downtrend in gold. Having said that, if you look at the 4-hour time frame, here, so let me just, these are markings from last week. We have such areas over here where buying started. So if at all, if at all I'm thinking gold is going to start weakening from here, this is like the deciding point. If we get past this area of demand here, then you can make a conclusion that we are going lower. But I will say it's highly unlikely at the moment, because the only time you're probably going to see, so if you break this level here, you're probably going to see gold getting to this level. And then from there, if you're bullish, you'll have good opportunities to take it back up. So at the moment, it looks like the steam is off, but not quite, because if the dollar is looking weak, then we might still see a continuation of the uptrend. But this is scenario one. Scenario two will be us breaking this point over here. If we break this point over here, I can either wait for a retest or just look for buying opportunities above this level. So the bias at the moment seems to be favoring upside momentum. Yeah, but to play it safe, some of us will have to wait until this point. Okay, so That's on gold. Let's talk about USD JPY, which formed quite a nice trend. Remember last time we said, so one thing about USD JPY is the Bank of Japan usually intervenes. This is something I forgot to mention last week, but you see this sharp drop in prices here. This was the last time they announced that they're going to intervene in the FX markets. And what happened is we had this push downwards. Yeah. So we say that these guys are more likely than not going to be active in the markets. Yeah. If they see their currency is weak, that is the Bank of Japan. Meaning, if we start heading back to the same point where they intervened last time, then it's highly unlikely that traders will want to trade against the Bank of Japan. And that's why we had this reversal. We had market coming to fill in this gap, and then we had this reversal. So our expectation last week was that the dollar might continue strengthening should we see an improvement in employment numbers. And that's why we had these arrows noted there. However, as you can see, for the better part of the week, we've just been heading lower, yeah, because of all the negative info, not the negative info, but the data coming out that's showing inflation is likely cooling off, yeah. So that's USD JPY. Just a minute, let me see. Okay, so you can keep the questions coming in. You can keep the questions coming in while I go through these charts. Okay, so we've done gold, we've done Euro USD. Pound should be the same. So theme is the same. Most of the time when you're trading, you're just looking at what the Fed is doing. Okay. And stocks should be heading higher. Why? Because we are seeing, just a minute. Yeah, so this is S&P 500. You seem to be in this upwards structure, rising wedge, like that. So ideally, it should be the same. Expectation is because inflation is coming down, we might start to see bets that the Fed will continue hiking aggressively come even down. We've confirmed with the 1-year treasury yield. We've seen that it's coming down from the high of 5 to around 5.3, getting closer to the interest rates for the US, which is at 5.25. So that's one thing to note. So I'm taking the questions one by one. Gold has been the strongest, when inflation was highest. Treasuries are generating good interests. Okay, so gold. Okay, so let's go back to the chart. So I'm checking the questions one by one. Most of the times, gold is used as a fear index. It's less of an inflation. Okay, so to some extent, it is an inflation edge, but we have what we call treasury inflation tips. So if I just Google tips, let me come to the charts. So whenever you do analysis for gold, you have to compare to what is the alternative for gold, yeah? And the alternative for gold is this, yeah? Treasury inflation protected securities. So these are securities you invest in to hedge against inflation, yeah? These are the main things you compare gold against, because even these ones are an inflation hedge. So when you talk about investing in gold as an inflation hedge versus treasuries, you need to like go through the dynamics and see what people compare it with. Yeah. So most of the times, as long as the US is looking very safe, people will go for inflation protected securities. Why? Because they're offering an interest on them. Yeah. So that's one thing you need to compare when you're doing. So you don't just look at treasuries just because you're looking at treasuries. Okay, can you kindly explain AUD USD? Okay, let's first see what the Reserve Bank of Australia has been up to. Okay, so AUD USD is, yeah. Okay. So if you're trading, guys, at the moment the theme is the same. Remember when we were getting off COVID, US was the first one to start hiking rates. Yeah. And the chances what the market is interpreting is US will probably be the first one to start tapering. Sorry, not to start tapering, to start cutting rates. Yeah. That's why you're seeing generally. So let's look at sentiments from Forex Factory here. So you see, like here it's saying it's possible that there will be more rate hikes still to come. Remember, US is not facing an inflation problem as from the data that we have received this week. So that's something you need to look into. That means if these other economies still have, say, issues with inflation, they might keep rates higher for longer, and that might prove that. So they might keep inflation. Just a minute. Okay, so they might put. So we're saying that these are the economies. We still don't know how the consensus is around inflation expectations, and that means for Australia, countries like Australia, where they're saying, for example, more rate hikes to come, it might make the Australian dollar more attractive in the long run than the US dollar, because inflation is coming down in the US. Yeah. So if we look at the chart here, if you look at this chart, story is the same. We have this strong uptrend because of the data we've received this week, and if everything stays the same, we should see a continuation in this. So this is a very good opportunity to do trend trading and things like that, because the fundamentals are backing you up. And now in an upwards trend like this, where would I want to look for entries? Obviously, for me, I wouldn't be chasing prices. I'd first look for proper pullbacks. This upward momentum is still very strong. I can say it has room for some sizable pullbacks before we continue going higher. So that's one thing to note with AUD USD. I hope that answers your question. Just look for pullbacks and see opportunities where you can go long. If at all things change and comes back down, which is very highly unlikely, then you need to see it complete this entire move, because this is where the perception that inflation in the US is being brought under control started. So if at all you're bearish in this market, let AUD USD clear this first, and then see what's happening with the fundamentals that's changing or shifting the narrative. Because at the moment, even if you come all the way down, it's providing more opportunities for buyers to go long. Okay, so that's that. Some motion for Uganda. GBP USD, and then Michigan consumer sentiment. Okay, so at the moment, if I open my charts, for example, I see AUD is going up, I see Euro going up, I see GU also going up. I know it's something about the dollar, yeah, and we've discussed it extensively. So in a chart like this, I think the story will be the same. So let's remove it. Again, what we'll be waiting for are pullbacks. Don't try and chase the markets, because you might be the last one in the uptrend. So it's usually very ideal to okay, sorry about that. So yeah, I was saying, in as much as fundamentals are backing you, always remember to wait for a proper pullback before you get into this market. So it's the same for here. You have potential areas to look for upward setups where the demand started here. We have another place over here where buying started. So I'm just marking out areas where intense buying started, And that's usually the last downward candle before the market started moving up. Those are potential areas. Alternatively, if you're using other techniques, if you're using a fib, you'll plot a fib on that move and then see where it comes. You can see there's a confluence between the fib and the buying area region where we had this second push upwards. So again, if you're using indicators, you probably want to do the same. Remember, we have this level, so I can just pick one of these lines from here and then put it here because we have a resistance that might be support the future. So pullbacks, okay, before I get to that, will bank earnings impact the markets today? What is beyond gold? So we've already discussed gold. Bank earnings, okay, so generally, if you look at the trend, the main theme in the market is that inflation is cooling off, yeah? And remember, when we had high interest rates, some banks in the US started having some level of distress. So unless there is some material change in earnings, I don't expect it to have that big of an impact. Because at the end of the day, when you're analyzing fundamentals, you need to know what's important for the day and what's not. Some things might not be as important if they come within the range. If you have some very big difference between expectations, for example, for earnings and the actual earnings, that's when things might really move the markets. So that's one thing to look to keep in mind. When you're doing fundamental analysis, a lot of guys usually make the mistake. So I can come to this chart, this calendar here, and then I start thinking everything. I need to look at everything on this calendar. That's not the case. You need to be able to deduce what's important and what's not, even if it's marked in red. Yeah. For example, if PPI yesterday came in stronger, whereas CPI for the previous day was weak, then CPI will take precedence over PPI. Things like that. So you need to deduce what's the main theme in the market and how that translates going forward. What is the market looking at? Yeah. Okay. So there was one question about what do you mean by a proper pullback? So, for example, so you can just keep the questions coming while we go through the charts. I know there's a chart we're supposed to look at. Gold, we'll look at gold again. So if, for example, I'm in this upwards push here, I've seen the markets steadily going higher. Yeah. At any point in this move, I wouldn't, if I've seen the move has moved, maybe this is US 500. So it's moved probably, so the average movement for US 500 is around 1,000 pips. So if I see the market has moved like 700 pips, I wouldn't want to be the last one buying in this chart, so that expecting another 1,000 pips, you know, it's looking very highly unlikely. Yeah. On average, when we have an impulsive move, how big is that impulsive move? That's one thing you need to know in an uptrend. If it's gold, for example, let's look at gold, and I go to the daily, the daily hourly time frame, and I zoom out. Yeah. Every time, if I zoom out on this chart, these impulses, so let's say, for example, this one here, we know that it moves by about 200 pips. Yeah. All the major moves for gold, this one was a really big one. This was about 300 pips. So if I know that gold moves a certain distance, even if there is major news, I wouldn't want to get in at 300 pips long because it's already gone up 300 pips. I don't know if I'm making sense. You'd want to wait for the market to come rest a bit. So if you're in an uptrend like this, so if this is the market forming an uptrend, you wouldn't want to get at the top, even if the sentiment was buy. For example, in this case, we have market making higher highs. I wouldn't want to be a buyer at this point here because chances are, even if I'm buying here, even if I'm buying at this point, the market might come back lower before making a new high, which is basic market movement, like that. Yeah, that means I have to wait for at least the market to push lower, because you have traders taking profits, you have traders resizing their positions and things like that. So you'll obviously have a pullback first before the market going higher. So you wouldn't want to get in at the top as a buyer, even though you're right, the market is going up. That's what I mean by waiting for a pullback. So if you look at, for example, Euro USD, GBP USD, and even USD JPY, these markets have moved quite a substantial distance already. So you wouldn't want to be the last one getting in as a sell in this case. Okay. So let's get to what we should be expecting let me change this to the charts, the calendar. So just to summarize before we get into the news we're expecting, the theme is there is more evidence for a weaker dollar generally across the board. That means euro is going higher, pound is going higher, USD JPY is going lower, AUD USD is going higher, gold is going higher. But you need to use your technical analysis to find the optimal areas where you can enter long, and don't just chase the price. At the end of the day, avoid trying to chase the price. Okay. So so we have consumer sentiment coming in later in the evening. One trick to note, or to know if you're trying to gauge whether something is going to affect the market or not, is expand on that news. The previous announcement was on June 16th. Go to your chart on June 16th, because if I click on this, it will tell me even the time. It will go to the page and show me the time. Go to your chart at that same time and that same date. See if there was a substantial or a material movement in the market as a result of this announcement. That's how you can gauge whether you need to be focusing on a certain item or not. Yeah. So if I click on, for example, June 16th, it will take me to June 16th, and it will open for me the prelim sentiment report for them. So I know it's at 5 p.m. So I can go back to the charts and confirm, having this huge difference, did it really affect the market? And most of the times you'll realize that not many things affect the market, apart from inflation and employment and interest rates. Yeah. So that's one thing you can go look at, but let's look at next week, see what to expect. Okay. So next week, from Monday, we have China, industrial production and GDP. So when you're looking at China, know that you're in proxy looking at Australia, because Australia exports a lot to China. So if China's economy is doing well, then you should expect some slight strength in Australian dollar. So this is the industrial production report and the GDP. And then we have Empire State Manufacturing. So next week is not as packed as this week, because this week we had quite a lot. Again, also for the Empire State Manufacturing, unless it's very extreme, don't expect it to move the market as much, unless it's very extreme. Just because it's in red doesn't mean it's moving the markets. So that's one thing to note. So unless the report comes out very, even at the time, look at these previous reports, even when it comes in extreme, try and see, does this have a lasting impact on the market? Most of the times, it usually doesn't. But if it comes in that it's like a very huge difference, then chances are it will. But if you can always just backtest with these other dates. So if I go to June 15th at 3:30 p.m., I can see the Empire State Manufacturing Index report and compare to the reaction in the chart. So that's what's coming up then. And then we have the minutes. So here we are going to see sentiments that are going to affect the Australian dollar. Remember, we already had some comments this week, and the comments were that they might see some hikes. So you're seeing the Reserve Bank of Australia governor pointing towards the possibility of higher rates to come. Doesn't necessarily mean they'll do it. They're just trying to create that expectation. Usually, most of the times, it's enough to guide the markets accordingly. And then we have Canadian CPI. Of course, that's going to affect the market. We have UK CPI. So for these two, do you have? Yeah, no, we don't. Okay. So for these two, given the current trend and the current status quo in the market, this should be the deciding factor on how these trends behave in the larger time frame. For example, Canadian CPI, we know that if you look at USD CAD, which is here, if you look at USD CAD, we clearly have a downtrend, and this was in fact a change in sentiment. Remember, the last time we were looking at USD CAD, it had broken new highs and it was attempting to go higher. Yeah. However, that's changed, and now you seem like you're going lower. I'll be interested to know if you can retest this level before going lower. Yeah. But because you have CPI next week, it's going to decide whether we're going to see new lows or not. And if we make new lows, I know it'll be on Friday, so this will have already passed. We'll be trying to see if we can confirm that you're indeed going to get to these all-time lows down here. Yeah, these are yearly lows. So that's for Canada. What else do we have here? We have, again, New Zealand, and we have Australia. So yeah, so this week, the trends are very much defined. You'll probably have an opportunity either today, Friday, or Monday before things start changing again with the Australian minutes, Canada CPI, New Zealand CPI, and employment data. So those are the key things to look at from Australia and New Zealand for next week. However, the prevailing sentiment is if we continue seeing US economic data coming in as it is, then chances are we'll continue seeing the dollar going lower. And you can always confirm with the yields. So having said that, any news you're expecting to back the dollar next week? Okay, so when we started the stream, we've talked about, so just a minute. When we started the stream, we've talked about this. Yeah, this was the main headline that we started with. Dollar losing long positions. That means buyers are quickly removing their trades, and it's very hard to find a counter argument against a strong dollar. Sorry, against a bearish or a weak dollar. So chances are we might see there is not a lot of fundamentals to suggest a strong dollar at the moment. So I hope that answers your question. Okay, having said that, thank you for joining in the session. It's always nice to interact and to brainstorm. Shout out to all the guys who asked questions today. It really makes the session lively. And next time you're having these sessions, kindly just come with as many questions as you can so that we can have an even more interactive session. And we can get even setups that we were not even looking at. So usually, in as much as we've done the research, usually have also things that we are finding out as we do the stream, which is nice because that's the process of analysis. So having said that, thanks again for attending, and see you in the next session next week.